Hi there, welcome to Kneppy Invest and welcome to Friday, the 22nd of August 2025. Time is currently 2:47 p.m. So about 1 hour and 22 minutes left of trading, not only today, but for this week on another fairly busy day on the ASX. Quite a few companies released their results today, and we have seen some extreme, maybe I'm being a little bit overly dramatic and saying extreme, but we have seen some interesting reactions from the market in terms of some of these results, including some pretty big companies. And yes, in fact, some pretty bad reactions for some food companies, chicken and Mexican. Okay, so what I'm going to do in today's video, we'll go through the ASX today, have a look at the best and worst performing sectors, indices, also companies. Then we'll go through the top 5 stocks of the day. Most of these companies' share prices are either up or down by over 15%. I think that was the limit. Maybe it was even 16 or 17%. There are a few other companies whose share price was down by or up by less than 15% or between 10 and 15% that I thought had a chance to get in top 5 stocks, but they did not. They missed it. They missed out. Then we'll have a look at the crap company of the day. Yes, the crap company of the day. And then the chart of the day. I just had to throw this company in because I'm a long-term shareholder. And I've got another story about this company, Clinuvel, CUV. Okay. Now, before we have a look at the ASX today, I did go for my last conditioning hike before my trip overseas. And this was up a mountain where it has rained 300 millimeters in the last 2 days, almost 300 millimeters, very close. It was extremely wet. In fact, when I left, it was raining. By halfway through the hike, because I was doing laps up and down, by halfway through the hike, it had stopped raining and sun started to come out. Now it's actually completely sunny, and for the next 2 weeks at least, it should be really nice weather where I am finally. I already can see the possible weather for the day I'm leaving, and it might be quite sunny and quite nice. And the other thing I should mention is leeches. Lots and lots and lots of leeches. Massive amount of leeches. Anyway, you don't really care about that. Let's have a look at the ASX today. And we have seen a bit of a red day, not a lot. A good day for tech, up 0.17%. Now, I can't really recall, I can't tell you what happened on the NASDAQ and the Dow Jones because I didn't really look at it this morning. In fact, that reminds me, I have to play Wordle. I did not play Wordle this morning. And typically when I don't play it in the morning, I forget to play it, and that's when I have a missed day. So I've just reminded myself. Anyway, because I was too excited about this hike. Anyway, let's just have a look at what happened on Wall Street overnight. I'm assuming nothing too bad. Oh, down. NASDAQ down 0.46%. Dow Jones down 0.34%. TSX was actually up 0.63%. So maybe NASDAQ futures are down slightly. And Asian markets, yeah, all over the place. Some down, some up. Okay, so maybe we are down because of the going past 9,000. Maybe that is a resistance level. It's a round number, 9,000. It took a while to get above 8,000, I think. I can't remember. Okay, so let's go back to the ASX today, and we'll look at the best and worst performing sectors. Financials, another good day. Banks are running hot for some reason. No idea why. Another good day for IT. Well, I shouldn't say another good day. And a pretty negative day for most of the other sectors, including healthcare, real estate, and staples, all down by more than 1%. I'm wondering if that's because of some results. We'll have a look at that in a second. Why staples? I'm trying to remember, is that Inghams? Inghams, that's probably has sent us, or maybe, no, Guzman Gomez is not staples. It's not a staple thing. You don't have to eat. But I'm wondering if chicken would be considered staple. I don't know. Let's have a look. We can see. And no, Inghams is not there. Oh, no, it is there, down 19.72%. Of course, it's in the top 5 stocks. But fairly weak across the board here. Yeah, Big Cheese down. They released results yesterday, but fairly weak across the board. But yeah, Inghams is staple. I suppose chicken staples, yeah, but definitely Mexican is not. Yeah, it's not a staple. Maybe in Mexico, or Mexico. Yeah, maybe in Mexico, Mexican is a staple, but not here. Okay, that's interesting in itself, I suppose. And the ASX 20 down at 0.18%. So I'm assuming the banks have had a good day. Have no idea about iron ore. Let's have a look at this. I would think maybe 8 companies up, 12 down. Well, there you go. Eight companies up, 12 down. Yeah, I got that right. And the best performing companies today: REA Group, Westpac, NABs. Yes, so banks, some banks in there. Telstra Communications, Telstra, which is in telecommunications. That's not the name of the company. And yeah, no surprises there. On the downside, Guzman Group, they did release results yesterday. It wasn't that negative. So that has led to real estate having a weak day today. There you go. And CSL, another down day. However, there was a bit of a bounce. It was either yesterday or the day before. Okay, now on to quick look. Oh, Guzman Gomez. Oh, it's interesting. It's going to be interesting to see what they say, because it just says there Guzman Gomez shares tumble 20% on disappointing financial year 25 results. I might disagree with that. The results actually were okay. It was sort of the trading update. I think that's the reason why the share price dropped. And I'll talk about that in the top 5 stocks. In fact, Guzman Gomez is the stock of the day, by the way. Okay, so that's interesting. So maybe I'm going to disagree with whoever wrote this. Okay, on to the top gainers. And I'm not even talking about Kaylee Resources. Back into a trading halt. They've got another price query, more than likely. Share price up 331.58% on nothing. It's a trading stock right now. This reminds me of those meme stocks. I think I've already mentioned that in the United States. It's just ridiculous. And that's the third trading halt in 2 trading days or 3 trading days, maybe. It's ridiculous. So let's move on. Great Northern Minerals, I will discuss this company. That is, this share price is up 272%, and that is the one company I do want to discuss here. Are the good performers today? Nothing much here. Although Cuscal is up 26.78%. I do want to discuss this because I sort of understand why the share price is up on acquisition. I don't think it's up on their results. They did release results, and they also announced an acquisition. I had a quick look at the results. I was like, but the share price or the market loves this acquisition, maybe. Anyway, Zip's up 18.27%. So both of those companies are in my top 5, along with hipages up 16.9%. So some positive reactions from results, particularly Zip and hipages. I think Cuscal acquisition maybe. Anyway, best companies by market cap, and this would be Codan, another pretty good day. This Codan is, by my screener, high quality screener, Codan is a high quality company. Clinuvel up, I'll discuss that in the chart of the day. I'm trying to remember what other companies released results. Artria up again after a pretty good announcement yesterday. I think that's it. Oh, Coast Entertainment Holdings did release results. I don't care about that company. Up 8.11%. I think that's it. So let's look at this company called Great Northern Minerals, the best performer today. And that's ignoring Kaylee Resources, because I think we can ignore that one. Now, Great Northern Minerals did release something, and this is an acquisition. So sometimes you'll see the share price up 325%. Now, whether the share price deserves to be up this higher on an acquisition, a strategic acquisition, is that rare earths and SB. What's SB? What is SB? I'm going to look stupid when I find out what SB is. And I'm looking for it now. Come on, SP, whatever. Anyway, anti-Modi, that was the word. That was it. I was looking for that one. Anyway, so this is an acquisition. Now, I don't think world-class Mountain Pass District, California, USA, directly adjacent to MP Materials with a market cap of $12 billion, Loxley Resources, LKY, and Bayon Mining, BMM, within 6 kilometers from Dateline Resources, DTR. Some of these companies, Loxley, I don't know anything about MP Materials, but Loxley Resources share price has gone bonkers. Dateline Resources share price has gone bonkers. If you don't believe me, let's have a look at the chart for both these companies. And this probably explains why the share price of whatever this company is called, Great Northern Minerals, has gone bonkers. Look at this chart for Loxley Resources. It's gone bonkers. Share price has gone from 2 cents to 22 cents in a fairly short period of time. And then one is Dateline. This has been on the top performer, has been on the top gainer list time and time again. And look at that, bonkers. Both companies have gone bonkers. In fact, Dateline has gone from 0.6 cents to 22 cents. Anyway, so I think there's a little bit too much froth in this space at this point in time, a little bit too much excitement. And that's why we're starting to see these companies acquire these sort of projects, because it's exciting. Anyway, so let's have a look at GNM. There's probably other stuff in here that makes it look even better. I don't know. But why is this? Whoever's selling this, why are they selling it? Why? They've probably explained it here. Maybe it's like an administration or something. Anyway, so still a historic stock, and you're going to see a lot of volatility in these sort of companies. So let's have a look at the chart for GNM, but you shouldn't ignore these sort of market reaction days. Look at that. It's gone from 1.5 cents, 2 cents, up to 6.6 cents. And the reason I say you should not ignore these sort of events, if you go to Dateline, and we go back a little bit, the breakout for Dateline was when on the day the share price rose 200%. And that was on the 2nd of May, not long ago. So on the 2nd of May, share price of this company rose 200%. And there would have been some people saying, oh, you're too late. You're too late. Share price was at 2.5 cents on the day. It's gone up tenfold since then. So just because the share price has gone up a lot in one day doesn't necessarily mean that's the end of the uptrend. In fact, for Dayline, that was a start. And I have a feeling maybe the same could be said for Loxley. And the share price of this company popped up around about the same time. In fact, there was one day here where the share price rose up. Oh no, it was only 59%. Oh, and then it rallied significantly. Yep. So just because it's up 300% doesn't mean that's the end of the story for Great Northern Minerals, but not for me. Not for me. And that's it for the top gainers. Now let's have a look at the top losers. Okay. Oh, Sky City. I don't know if the share price is down because of their results they released yesterday. They went into training halt to announce a capital raising, and that was a heavily discounted capital raising. So the share price down because of that, or because of the weak results. I don't know. It's a double banger. I decided not to put Sky City into the top 5 because it's down by the most, by the way. Another company has seen the share price either increase or decrease by that amount, but I just don't know why the share price is down. But I will talk about Sky City in a second. Otherwise, we've also seen a pretty bad day for Guzman. We'll discuss that company. Inghams Group, Accent Group did not make in the top 5, down 16.27%. So you can just see some companies who share price has decreased a lot did not make in the top 5. And that also includes Monash IVF. Share price down 12.4% on their results. Otherwise, PW Holdings, they released results late yesterday. Share price down 11%. Yeah, and I was thinking, I'm going to have to talk about that company, but I'm not. And the worst performing companies by market cap, Regis Resources released results. Share price down. Objective down on a day after a pretty good day. And Visan, I'm pretty surprised by Visan. I'm going to have a closer look at Visan. Share price down 7% on their results. I thought the results are okay, but maybe they slightly missed forecast. But even if they slightly missed forecast, it's a slight miss, and it was a pretty good year for the company. I'm just going to say. And that's about it. So let's have a look at Sky City. Now, they did release results yesterday, and I have a feeling it was a slight disappointment. And they also went into a trading halt. I have seen this now a few times in the past year where a company releases either financial results, financial results. I'm going to say Pennies 4Cs, but a company releases Pennies 4C and then they go into trading halt to do a capital raising. And a great example of that was Vection Technologies, who had a really good quarter. Then they went into trading halt at almost the same time to raise capital at a massive discount. And I was just thinking, if they didn't do that, if they just waited a few days, they could have got so much more money for the capital raising, but whatever. Share price is significantly higher now. Anyway, so went in trading halt for a capital raising. Now the share price was 91 cents, and this was heavily discounted. There was another company. Oh no, the crap company of the day. I'll talk about that company soonish. So the capital raising price was heavily discounted at 70 cents New Zealand dollars, which is like 5.5 cents Australian. No, I'm kidding. But it was heavily discounted, and that's why the share price is down a fair bit today. Plus, I do think the results were weak. And the reason I say that, Sky City shares plunge on discounted equity raise, 4-year profit miss. We could actually have a quick look at this Morgan's calendar. No, there's no Sky City here. So I'm just gonna agree that it was a slight miss when it comes to results, but also heavily discounted capital raising. But what was the main driving force for the share price dropping? By the way, Morgan's calendar does have Visan today, which is interesting, but they did not have Zip. Did not have, what's the other one? hipages or Cuscal, but they did have Visan. So does that mean Visan has made it? I don't know. Okay, let's have a look at the chart for Sky City. And this is going to look complete opposite to Loxley. And this is a horrible, horrendous, terrible, and not any sort of other adjective, atrocious chart. Yeah, this is an atrocious chart. It's been in a downtrend for a long time. Now, on occasion, you see some moving average crossovers, but that was false. And the share price has been dropping since 2021. So we're talking about 4 years. And during that 4-year period, share price has dropped from 338 to 64 cents. It has been a terrible 4-year period for this company. And there would be people who have held this company during that whole period. And this is another really good example that technical analysis can really help in not having these companies in your portfolio. It can really help because you would have got signal after signal that this was not a hold. Yeah, this is a great downtrend chart. Anyway, okay, so let's get into the top 5 stocks of the day. A lot of companies did not make it. So I've already discussed PWR Holdings. What else? Monash, Regis, Cogstate. I like their results. By the way, Cogstate. Come on, Cogstate. Please be up. I'm training this one. Or 4 point. That's good enough. AMA Group released results. What's this one up? 1%. Credit Clear had a pretty good announcement today. Share price up 8.16%. On another day, I would have discussed Credit Clear. And even, yeah, Accent Group did not quite make it, even though the share price is down 17%. And it's really interesting. We're seeing some retail companies release good results and bad results. So completely different reactions from the market. And also Laser Bond, share price last time I looked at it was flat, but share price up a little bit on results and also leadership transition. And the other one was Visan. So I'm a little bit surprised the share price of this one is down. It's not down a lot, but 5%. Okay, so let's talk about the top 5 stocks of the day. Starting with hipages Group, share price up 19.27%. 19.27% on their results. Now, no indication of how these results meet expectations, but if we go back to the half-year results, they did provide some guidance for the full year, and we can actually see how they met guidance. So that's what I'm going to do right now. Now, revenue came in at $83.1 million. Now, at the half year, they did suggest that revenue, or their revenue target, was between 83 and 84 million. So came in at 83.1. I would have actually called this a slight miss because it was below the midpoint. So a very slight miss when it came to total revenue. They also guided for EBITDA margin expansion. Free cash flow, 5 to 6 million. And they did provide free cash flow, came in at 5.6 million, which is a slight beat. It's a very slight beat. But anyway, if you have a look at how the performance of this company has gone over the last year, nice increases in revenue, 10% increase, which is what I'm looking for. Profit up, well, statutory profit, that's reported profit, it's not real profit. Free cash flow up 162% from 2.1 to 5.6 million. I was going to say that's the half year. No, that's the full year. So it does look like a nice quarter, or half year, no, full year. But the question I have in these sort of situations is why? Why is the share price up so much? Now, you can't really tell that from the financial results, but sometimes they do give a nice little update. Here it is, financial year 26 outlook. I am just wondering if it's just based off the outlook. For instance, they're talking about revenue growth 10 to 12%, EBITDA margins 24 to 26%, and free cash flow of $8 to $10 million. So maybe that is a little bit better than expected than the experts or the forecast, and that could be the simple reason why the share price is up. That's it. So let's have a chart. Let's have a look at the chart for hipages. Let's see if this is a bit of a breakout. Oh, not really. Maybe a short-term breakout. Share price was at these levels not that long ago, January. So it is at 6-month high. So maybe this is a breakout for hipages. I probably would prefer a little bit higher volume. So there is high volume, but it's not extremely high volume. Okay, coming in at number 4, we have Zip. I'm wondering if the share price is now, it's up 18.75%. I was hoping maybe up 20%. Okay, so they did release results, and not only results, they did announce they are considering a dual listing on the NASDAQ. And I think maybe that has fueled a little bit of excitement as well. Now, their title here is Outstanding Results with Significant US Growth and Operating Leverage. I would expect this company to focus mostly on USA, which is probably the reason why they're considering listing on the NASDAQ. And the reason I say that is if you have a look at the financial performance, and here it is. This is an interesting table. Just have a look at USA compared to ANZ. There's no growth. This company has seen maturity, has reached maturity in Australia and New Zealand. There's no more growth. There's no more growth here. And maybe that's why they're pivoting towards USA, because revenue up 46% in USA, down 1% in ANZ. Total transaction volume up 43.9% in USA, up 5.5% in ANZ. Now, transactions in Australia and New Zealand up 12.6%, in USA up 33.6%. Active customers USA up 11%, down 6.8% in Australia and New Zealand, and merchants both rising. In fact, in Australia and New Zealand up 10.3%. Net bad debts down from 1.66% to 1.52%. Okay, so cash EBITDA without the interest, 170.3 million. Now, was this company profitable? I actually did not have a look at their results. Or did I? No, I didn't have a look at this. They did not mention anything about profitability here. They just mentioned cash EBITDA, operating margins, total income, which is not profit because that's a pretty big profit. It was over $1 billion. Gross profit. There's no actually mention of profit here. I'm just wondering if the company was profitable. Ooh, that's the auditors. Got way past it. Here we go. We're at it. Okay, so this is a profit and loss. And they were profitable by $66 million. So this company is profitable now based off this. Based off this, I'll have to have a closer look. They are profitable. And cash flow, well, maybe you should look at cash flow for this type of company. Maybe, I don't know. Okay, so the company is, by their profit and loss statement, they are profitable. Okay. Do they actually mention anything about profitability elsewhere? I would have been screaming that if I was them. I would have been saying, we are profitable. Look at this. We are profitable. But they're not. Maybe they don't really care about that. Let's have a look. No, that's it. Might have a look at their presentation later on. Now, let's have a look at Capital Brief just to see what they've mentioned here. I'm assuming they have mentioned Zip. Here we go. Ships saw on growth. NASDAQ listing consideration. I'm just going to see if there's any sort of beat here as well. That's why I'm looking at this. Okay, so RBC Capital Markets analyst Jack Lynch said, Zip has posted a strong financial year 25 result with cash EBITDA ahead of consensus, according to Visible Alpha. I did have a look at Visible Alpha, but You have to pay a lot of money, I think. And US customer growth was up 11% on the previous corresponding period. Lynch also said the financial 26 guidance, which I actually didn't look at, of more than 1.3% cash EBITDA margin could prove conservative given fourth quarter cash EBITDA margins were at 1.6%. And then another analysis just mentioned US active customer count was ahead of expectations. There you go. So that shows you sometimes what you should be looking. Active customer count could be fairly important. And that's from Annabelle Korn. And they said we would expect support for the stock today, all else equal, given the strength of the US result. So it's all based off the US result. And what else did they mention here? So the profit number came in ahead of the market. Oh, there was some consensus when it came to profit. So consensus was 54.8 million, and it was ahead of that. So a few reasons why the share price of this company is higher today. So let's have a look at the chart for Zip. And by the way, I am trading this one. So this is one of those results where I was really interested. There's me buying some at $1.75. And that was just on a nice little update on the 16th of April, not that long ago, just after the tariff debacle. And the share price has now doubled since then. Go Zip. And the share price might be at a long-term high, but still well short of what happened in 2021. But we're talking about share price at almost a 4-year high. So Zip is definitely in a much better spot right now than what it was back in 2021. Much better, without doubt. Okay, pretty good day for that one. Now on to Inghams. This was a bit of a woof. I saw these results and I was like, woof, woof, woof. Now, when I saw these results at just after midday, or closer to 12:30, I knew the share price was down 20%, and I was expecting to see something pretty negative. And was it negative? Wowzers. And this was compared to expectations, which I did get from Morgan's calendar. I did write down, though. I wrote down somewhere. Here it is. And this was a massive, I just put miss. Revenue miss, EBITDA miss, profit miss. In fact, the profit was a massive miss. So expectations on profit, in fact, let's go to results. So profit came in at 89.8 and expectations or consensus, profit was 101.2. EBITDA consensus was 243, came in at 236 point. Don't look at EBITDA, 392.2. Look at underlying EBITDA, which was 236.4. And even revenue was a slight miss. So expectations were revenue coming in at 3.164 billion. It came at 3.152 billion. So it just misses across the board. And I did not even have a look at any sort of outlook. I just went, this is really good. Here we go. Outlook or guidance, underlying EBITDA to between 215 and 230 million. So that's actually a decrease from this year. That's weak. Earnings are expected to be significantly weighted second half, reflecting both the impact of weaker trading conditions and the timing of benefits from the operational changes underway. Okay, so this is a pretty crappy guidance based off this. So I can definitely see why the share price is down. It was a miss and guidance is fairly weak. Okay, so let's have a look to see what Capital Brief says. Well, not Capital Brief, but any analysis. There you go. Inghams Group profit falls 11.5%, but that was released at 9:28 a.m. So let's see if there's anything else. No, there's nothing else after that. Anyway, here we go. Okay, so RBC Capital Markets Analysis, Michael Toner said the results were largely in line with guidance. What? We expect this to be overshadowed by negative outlook, yeah. Underlying EBITDA guidance came in 2.3% lower than market consensus. Yeah, I don't agree that the results were largely in guidance based off the Morgan's calendar. Profit was lower than a consensus, or the consensus here says 99 million, but it's still significantly lower than consensus. What else? Yeah, so I think it's just the miss with results and also the weak guidance. So let's have a look at chart for Inghams. I'm trying to remember if I ever traded this company before. I don't think I have. This, in my opinion, this is not a company owned for the long term. This is just a trading stock. And woof, another woof. Let's have a look at the weekly chart. By the way, I'm going to have a look at the weekly chart. And this is also proof that this is not company owned for the long term. Look at it. It's done nothing since it listed in 2016. It's gone nowhere. Share price has gone sideways. All you're going to get is a dividend. Even the dividend's probably weak. What is the dividend yield right now? It's 5.43%. I suppose that's okay. Now, so if you bought when the share price gets down to about 240, you might make a nice little capital gain plus the dividends. And the share price is 280. So maybe that's the way to play this. Just wait for the share price to drop to a good level. But otherwise, definitely not a long-term hold, in my opinion. But just look at the chart. It's not a high-quality company. Anyway, let's move on to Cuscal. I did not understand this one at all. Share price up 25.76%. Now, they made an acquisition. So I'm assuming a lot of the positive reaction is around the acquisition because I had a look at the results and I thought, yeah. Although saying that, I'm being a little bit unfair. It does mention here that pro forma profit of 38.4 was ahead of prospectus forecast, but that was the forecast of the market. So the market was saying profit of 38.4. So it came in line with market expectations. So that's the main reason I was going, why is the share price so much higher? Because the numbers came in as expected, except for the prospectus. But yeah, the market was expecting the results to beat the prospectus anyway. So anyway, otherwise, the profit was up 17%, earnings per share up 14 or 16%, pro forma adjusted EBITDA up 13%. So everything's moving in the right direction. But they also made an acquisition of a company called Inghams and $75 million in cash. And they're just talking about the cash funded acquisition is anticipated to generate $15 to $20 million in annual run rate cost synergies to be fully realized by financial year ending 2029, driving attractive EPS accretion of over 25% and return on invested capital of over 20%. The acquisition price, 1 times 1 price to book, and 25 times 3 / 3 times 0.7 times 5 something, whatever, price to earnings on a pre and post run rate synergy basis. And I'm wondering if that's why the share price is high because of the acquisition, because results were not that better than expected. In fact, they're in line with expectations. So let's have a look to see what Capital Ruth is saying. If they're saying anything, they might not be. Yep, I don't see anything. Although there might be more stories. Oh, here we go. At 9:16 a.m., full-year profit drops 9% to 29 million. So again, this is not, that's the reported profit, not the underlying profit. Cover Brief does this a lot. They report the reported profit, but the most important thing is the underlying profit. Anyway, or they do mention, here we go. The market consensus estimate for net profit after tax was expected to be 38.4, and it came in at 38.4. And then they just mentioned the acquisition. So let's have a look at this chart. And this chart, and this is a recent listing, so this chart looks really good. This chart looks really, really good. We'll go to the daily chart. And I was just wondering, so they listed in November 2024, so less than a year ago. And this was their first major results. So this is a nice chart, but maybe. I don't know. I'm undecided with Cuscal. Okay, and the stock of the day has to be, well, it doesn't have to be, I suppose. There's a lot of contenders, but I decided to go with Guzman. Share price down, 19.33%. It was down more than this. It was down by over 20%. But the reason I chose this one was simply because Guzman was, well, the share price, it went on a massive run when they listed. There was just way too much excitement about this company. I did not understand it. There would have to be, we could even say it was priced to perfection, and share price down 19%. Now, when I have a look at their results, without even knowing the share price had dropped, I went, results look okay. Network sales up, that's not revenue. 1.2 billion, underlying EBITDA up 44.7 million, EBITDA up 45.5%, profit up 151.8% to 14.5 million, and also a maiden dividend. I did have a look at their results compared to expectations, and I mentioned here revenue, a slight miss, very slight miss, 436 million compared to expectations of 440. but their EBITDA and profit were better than expected. So I put down a beat. EBITDA expectations were 63.4 and it came in at 65.1. And profit expectations of 13.9 came in at 14.5. So based off that, you might think the share price should have gone up. But there's two sides to the story here. Well, there's not two sides to the story. There's two really important things when it comes to results. It's not only how the numbers compare to expectations, it's also any sort of trading update. And they did provide a trading update that was weak, was really, really weak. There's the revenue, by the way. So network sales is much higher than revenue. Where is this update? I don't know about the US. I just don't understand why US would go for an Australian Mexican restaurant. It'd be like us getting excited about a Canadian Australian restaurant. Yeah, anyway. Yeah, here we go. Yeah, in the first 7 weeks of the financial year, Australian segment comp sales growth was 3.7%. And I was like, oh, that's not good. 3.7%. And then I actually did find, it might have been couple of brief, that the comparable sale or same, whatever it is, sales growth, estimates or forecast was 7.6%. So we're talking about 7.6% expected growth, and it came in at 3.7%. And then I also had a look at Morgan's calendar, and the market is expecting some really significant growth in financial year 26. So they're expecting revenue to go from 440 million to 567.8 million, profit to more than double. Oh, not quite, almost double. Earnings per share growth normalized to more than double. Dividend yield to double. Dividends per share to double. So the market is expecting some significant growth in financial year 26 for Guzman y Gomez. And I'm just wondering if this was a significant disappointment to the market. They also mentioned here, chance of a weak trading update and higher G&A versus consensus. We see slight risk around the outlook for financial year 26. As mentioned previously, Guzman y Gomez is currently cycling through a strong period of elevated demand. This could mean Guzman y Gomez's trading update for the first 7 weeks of this financial year sees softening comp sales growth. I'm just wondering if they've mentioned what their expectations. They didn't mention any expectations. So that has happened. That has happened. Good work, Morgan's calendar. And I think I found that information again in, it definitely would have been cover brief. Here we go. Guzman y Gomez 18% after providing very soft guidance. And that was it. Yeah, here it is. Mr. Toner, RBC Capital Market Analyst Michael Toner said comp sales growth of just 3.7% was less than half consensus expectations of 7.6%. He also noted that the margin outlook is also soft, with Guzman going between 5.9 to 6.3%. This was compared to the consensus estimates of 6.3%. There you go. And he also mentioned we anticipate consensus downgrades to Australia's segment comp sales growth for financial year 26, given the magnitude of the miss. That is why the share price is down. So on first look, I thought, oh, results are pretty good, but it's not the results and how they meet expectations. It's also the outlook that's important. And we have seen that a few times now. Let's have a look at the chart. This is another case where, so I could not categorize Guzman y Gomez as a high quality company, not just yet. And even though there was a lot of excitement in this company after they listed, the company had a get out of this stock back when they released results in February. Share price dove 14% on that day. You could have got out anywhere above, on that day, anywhere above 38.58. Even the next day when the share price dropped another 7%, by the way, that's not a good look. You could have got out above 35.66. Now the share price is 23.59. So sometimes it does pay to pay attention. This actually, if I was trading this would have been an absolute sell at that point. That would have been get out. That would be, and this is why I have these rules. So even though sometimes the share price of a company will rebound after this sort of day, and I do have examples of that, like Parenti. By far the majority of cases, you'll see the share price do exactly this. It'll keep on going down. Not all the time, but it's just to get out of these possible crap situations. Talking about crap situations, let's talk about the crap company of the day. Yes, crap company of the day. Now, this would not be a day-to-day thing. I would not have a crap company of the day in every single ASX Daily Rundown video. But one of the worst companies on the ASX, Peninsula Energy Uranium, with projects. I was going to say projects, maybe just one project in Wyoming. So many tailwinds behind this company, but if I was a share of this company, and my first question would be, why are you a share of this company? That would be my first question. Why are you a share of this company? And probably the response would be, I'm very bullish on uranium. Well, just because you're bullish on a sector doesn't mean you should be buying every company in that sector. Anyway, so I didn't really know that this company hasn't been trading for 4 months. I had no idea. I don't really follow this company all that closely. So this company has not been trading for 4 months. They've been in a trading halt and suspension, probably is the best word. And I just saw that they are doing an equity raising. And I was just thinking, this company has just done equity raising after equity raising after equity raising after equity raising. How much money do they need? Equity raising after equity raising after equity raising. Fully underwritten 70 million equity raise. And it's heavily discounted. So share price, 62 cents. And the reason they have to heavily discount it is because no one wants them. Why? Even then, even though it's heavily discounted, I'll probably be saying to anyone who's taking part in this, why are you doing it? So equity raise being conducted at 30 cents. So that's half where the share price is right now, representing a 51.6% discounted to the last trading price of 62 cents. Maybe this company can turn things around. I don't know, but why? So this is the crap company of the day. Production guidance updated. Who cares with that? I wonder if this revised production guidance is lower than it was before. It wouldn't surprise me either. This company has so many things going for it, but they just can't. They just can't do anything. Anyway, let's have a look at the chart for this one, even though I probably shouldn't because they've been trading for 4 months. But you can actually just see by the chart how crap this company is. And if we go back a few years. Now, the share price was in a nice little uptrend in 2021, 2022. But uranium companies, in fact, what I can do here is I'll get rid of the moving averages and I'll just put this as a line chart. And then I might put in, what's a PDN? Oh, no, I should put uranium. What's a good uranium? Oh, no. Oh, what I won't do, I don't think that's what I wanted. What I might do is I'll just go to Sprott Physical Uranium, if I can find it. There it is. And then what I'll do is I'll put in Peninsula on top of this. And ideally, you want to see a fairly good mirroring of the two. Oh, I did the same thing again. I've got to press the add button. There we go. That's better. Compare symbol. Peninsula Energy, same price scale. And you can see it from middle of 2023. One of these went up, the other one went down, exact opposite to what you want to see. Now, when uranium actually prices started to go down, it started 2024, well, Peninsula was in a downtrend right then, and the share price kept going down. So that's exactly the opposite to what you want to see. And this has been probably a horrible investment for shareholders. In fact, have a look at that. Since we'll go back to 2021. So Sprott Physical Uranium has gone up 150%, and Peninsula share price has gone down 50%. Yeah. Anyway, crap company of the day, Peninsula Energy. Now onto the chart of the day. Now this is actually a chart I haven't actually looked at, but I'm just wondering if this is a sort of bragger. Clinuvel Pharmaceuticals up 8.42% on clinical preparing upgrade of ADR program, NASDAQ up list. Interesting enough, the other day I'm going to show you right now, I did a little screener on Fiscal AI. Come on, work. Fiscal AI has been a little bit weird on this computer. I did a little screener, my high quality screener, rule of 10 screener, and I just slightly changed the, so what I do is I put in 10% revenue growth, 10% return on invested capital 5-year average, 10% operating margin 5-year average. I want those plus revenue 5-year CAGR all above 10% for companies above a market cap of $100 million, excluding mining companies. And then you put in ASX, but then I raised those to 20. I just want to see how many companies in the world satisfied revenue growth above 20%, return on invested capital and operating margins 5-year average above 20%. There's actually not a lot. 208 companies in the world satisfied this screener. So again, market cap above $100 million, excluding mining. And I thought, what about the ASX? How many companies satisfy this screener on the ASX? Only two. And those two companies are Pro Medicus and Clinuvel. Shock horror, Clinuvel. There you go. Now, I still would not say or categorize Clinuvel as a high quality company just yet because one product company, which always makes me a little bit nervous. Anyway, so they made this announcement about something to do with upgrade of ADR program, no dilution to shareholders, that sort of thing. And whenever you see NASDAQ just mentioned, sometimes you'll see the share price of a company go up. Let's have a look at the chart. I'm just interested just to see if this could be a bit of a turnaround. Get rid of you. We'll go back to candles. And we'll go to Clinuvel. So the share price of this company has been in a bit of a downtrend for a while. And I'm thinking potentially the downtrend is maybe coming to an end. Maybe. Now, the share price got as low as 950, and that meant the P/E ratio of this company would have been significantly lower. Yeah, P/E ratio currently at 15.64. Now, the company has experienced pretty good growth. Whether they continue to see that sort of growth remains to be seen. And I'm just waiting for the sign of a bit of a shift in sentiment. And maybe we're getting near to that point. I wouldn't be surprised to see the share price go sideways or consolidate for a while, sort of in a sideways movement. And that could be a sign that definitely the bottom has been reached. So no breakout just yet for Clinuvel, but I do think there's an argument. This company is pretty good value. Okay, that is all I have for this ASX Daily Rundown video. The last one for the week. Only 1 week to go, plus 1 day, for the next few months until I go on my break. Anyway, if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.